Start screen.
Hello, Assalamu alaikum, and a very good evening to all of
Welcome to
you.
the webinar. You have entered as an organizer and may indicate to any other organizers or panelists on the line.
Thank you very much for joining in, and welcome from ACCA. Can you all of you first of all confirm if you can hear us loud and clear? I'm looking at my questions dialog box. So if you're able to hear us, please say yes. Okay. Maria cannot hear. Anybody else? Are you able to hear us? Yes, can you hear me now? Yes, can you hear me now? Okay, just give me a second. All right, can you confirm if you can hear me now? Farjad. Okay. Anybody else who can not hear me? Okay, can you hear me now? You should be able to hear me. Yes, great. Thank you. All right, so let's now formally begin. Sorry for this little glitch, but we're all set now. Thank you very much for joining in, and a very warm welcome to all of you. Today, we are joined by two experts from the financial market, and hence the subject, swimming in the financial markets, as opposed to sinking. We've heard quite a few stories about people who don't know the market well. They trade on hearsay, and they trade on information which is gossip, and as a result, they sink. And we've seen quite a few big giants sinking. And therefore the term swimming. And even this swimming now has quite a bit of rules in place, right? So insider trading, we've seen people being penalized, insider trading, etc. People writing reports, and as a result, seeing an impact on financial markets. All that is strictly regulated under laws now, and we have a very strong, strict regulator sitting back there watching us doing what we are doing as financial markets. So this very, very interesting topic, and two of our experts, let me introduce them to you. We have Mr. Asim Amin, he's a fellow ACCA member and a fellow chartered accountant, and Mr. Raid Nazir also. He's a known figure if you're talking about academia and financial markets both, and he's also an ACCA member. So with these experts sitting with us, I must tell you that this webinar is being brought to you in collaboration with Achievers Training Services. which is an organization with which ACCA has partnered to deliver this webinar to you. So I hope all of you are going to enjoy today's session. It's going to be a 2-hour session. We're going to take namaz break. So we'll take a break for Maghrib prayers. So that's going to happen. In the meanwhile, as the session goes on, you can continue to send us your questions. I'm going to sit here and moderate, look at all your questions, and put up those questions which are relevant. So keep sending us your questions, and from time to time, we'll take a short question answer break and try to answer some of your questions that you send. In the end, we'll have a slightly longish question and answer session in which you can bombard these two trainers, these two experts with as many questions as you want. So with no further ado, let me first of all hand over to Mr. Asim Nazir, who's going to do a scene setting, and then Mr. Raid Nazir is going to continue with this session. So over to both of you.
Thank you very much, Mr. Hanu. I'm grateful that you very rightly briefed that these are the markets where there should not be any hearsay or guesswork. This is, in fact, the today's topic. You know, if I summarize it in one single sentence, so that is no guesswork, no hearsay, pure analysis, and then you have to do it. So, Bismillah ar-Rahman ar-Rahim. Assalamu alaikum to all of you. I would like to extend a very warm welcome to all the participants. And I would also like to express my gratitude to ACCA Pakistan in general, and Mr. Sajid Aslam, head of ACCA Pakistan, and Mr. Harun Ejar, head of Member Affairs, Minasa, for inviting us to speak on the topic of financial markets. Thank you, Mr. Harun. Now, so in today's session, we will be discussing 3 types of financial markets, although there are more than that: the stock market, the commodities market, and the forex market. These will be compared on the basis of different parameters, for example, or variables. For example, what are the assets traded in different types of stock market, financial markets, the size or volume of trade that is carried out in these 3 different markets, what regulations, they are high regulations, low regulations, how well these markets are regulated, how much liquid the assets are which are traded in these markets, what are the margins and leverage available to the investors or traders who want to work in this market, who are the main participants in these financial markets, how easy or difficult it is to do business in these markets, and most importantly, what are the factors that affect the prices of assets that are traded in these markets. Then the fundamental, the first part will be covered by myself. Then the next part, the fundamental and technical analysis, would be carried out by my co-presenter, Mr. Raid Nazir. He will guide you with real case life examples, actual cases that have happened in the past, and in the end, he will discuss the opportunities for the ACC communities in these markets. So, as we said earlier, Mr. Harun and myself, that if anyone wants to enter into these markets, he should not be entering on just hearsay or guesswork. In fact, rather, he should be doing all the fundamental analysis and the technical analysis, and with the combination of both, only then one should be, going in these markets. For the fundamental analysis, let's take the example of a share. Let's say Honda. Now, if someone wants to do the fundamental analysis, he should be doing the company analysis, the profile of the management, the repute of the management, and what type of management policies does it carry, the industry in which the company operates, in our case, automotive industry, the future outlook of the company as well as the industry should be looked into while carrying out the fundamental analysis, and the economic factors at the national level as well as the international level, like GDP growth, inflation, interest rates, and a variety of other factors. On the basis of all these, the fundamental analysis is carried out, and then one should be, entering into these markets. Now, the technical analysis part is, these are the statistical tools, techniques, measures, and which include charts, moving averages, indicators, oscillators, Fibonacci expansion and retracements. These are all technical things, but what I'm saying is that this technical analysis will give us an idea about the trend a particular asset is likely to follow as regards its price. So this matter would be definitely discussed in this seminar. Now, before we proceed, I would like to give you an insight about the financial markets, and for that, we will be looking at the price chart of gold. This would be just to give you an idea that what type of opportunities are available in the financial markets, and this chart will be discussed in the light of both types of analysis, the fundamental as well as the technical. Now, this is the real life situation which happened in the last 1 year. As you can see, that the price of gold was $1,460 in the month of March 2020. And as you can see that it rose and went up to $2,075 in August 2020 in a period of say 5 to 6 months. And you can see this is without much hindrance. There have been a few dips, but generally we can say that it has gone up and up and up. Now, we will discuss what actually happened, why did it go, and what were the factors that drove its price upwards as well as what drove its price downwards. Here we can see that this is the point, the support. You can see the word support. You see what is support? Here you can see that the price in the last many months from here to here, it touched a particular line which is called the support line. You can see it did not break this line. So this is a very strong indicator that the price was less likely to go down and more likely to go up because it had a very strong support at this level. So this is what actually happened, that the price went up. It did not break the support line downwards. And if we see it here, now here comes the decision to take a position of buy or sell. Now what we do is that from here we draw a trend line. This trend line will give us an idea as to what needs to be done. Now, I don't think you can see it very clearly, but these are bars, the green and red bars. These are called the candlesticks. It's a Japanese technique. Now, what happens is when we draw this trend line, in this seminar, it would be very difficult for me because of the time constraints that how to draw this line. Now, this is the skill one needs to master, one needs to acquire to draw these trend lines. But let's assume that there is a trend line and the decision was to take a buy position only and only if this green bullish candlestick was broken. You can see that here the candlestick was broken. If you can see the cursor, the candlestick was broken and here it was recommended a buy. Now this was on the basis of technical analysis, but it is not only on the basis of technical analysis alone that one should have taken a buy position. At this point in time, that was March 2020, you must all be aware of the fact that lockdowns had started in many countries of the world. And during the lockdown period, whenever there is an economic distress, there is a situation of difficulty, people tend to invest in gold because that has always been perceived as a safe haven. And that is something which people have always believed that it is a stable investment. It is not going to go down the drain. So because of this factor of the lockdown factor, people started investing in the safe asset of gold. Its demand rose, and on the basis of demand, its price was likely to go up. Higher the demand, higher the price. Lower the demand, lower the price. And when the demand was created, it was obvious that one should take a buy position. So if anyone had taken a buy position at this point, he would have definitely benefited out of it. So the buy decision was on the basis of fundamental as well as technical analysis both. Now, when the buy position was taken, the safe return would have been to sell it at the level when the previous target price was achieved, this one. So if you see in the previous case, here it was bought and it should have been sold over here. Someone could have taken further chance, but it would have been a very, very safe place to make a decision of selling that gold asset. Now, here we can again see that this psychological price level that is staying at this point in time. And now this is called resistance line. The earlier was support line, this is resistance line. Since we can see that this line is being broken upwards, so there was another decision, another opportunity to again take a buy position. Now here we can see it. What we did was that this buy position, now here again, there would be two things to be looked into, the fundamental analysis as well as the technical part of it. Now, first of all, the fundamental side. You must be aware that here the US dollar interest rates had fallen down, had decreased. Now, whenever there is a decrease in interest rates, two things happen. People have less incentive to invest in fixed income securities. So the money gets out from that part, the investments of an individual or an investor or an institutional investor. Second is, when the interest rates are lowered, not only the cost of deposits goes down, even the cost of financing goes down. So people have incentive to take credit, and they invest in high return opportunities like the financial markets. High return investment opportunity like the financial market. This was the fundamental side of taking buy position again. And as well as the technical side is concerned, here I would like to tell you a statistical tool known as the Fibonacci expansion and retracements. Now, again, just like the trend lines, it would not be possible for me to discuss this statistical tool or analysis, but I would also like to, but I would like to say that on the basis of Fibonacci expansion, which works in a bullish market. So we plotted that Fibonacci chart on the chart, Fibonacci expansion on the chart, and you can see that this chart gave us three target profit levels: target profit 1, target profit 2, and target profit 3. Now, target profit 1 was quite easy to achieve. That was very highly probable. Target profit 2 was comparatively less probable, but it still had a very high probability. Target profit level 3 again had a probability the price was likely to go to this point. It is very difficult to tell that to what extent the price level would go. But on the basis of technical and fundamental analysis, one can predict the trend upward or the downward. Now, if anyone had taken a buy position here, which was very much on the cards on the basis of financial as well as technical analysis, even if someone had sold at target profit 1 level, he would have had made good fortune. And if someone had gone up to target profit 2 or target profit 3, he would have made more money from this market. So finally, there is another chart when the prices rose to 2075. You see, prices can not always follow the upward trend forever. This is not possible. Prices also go down. Now, what happened here was we again did the fundamental analysis, and at this point in time, there was positive news that COVID vaccine is about to be rolled out in the next few months. So on this basis, when the economic activity restarted, people continued the economic activity, businesses started, and they pulled their money out from the gold asset, and they did their routine businesses and things and stuff. So here again, we drew a trend line. As I explained earlier, it is difficult to tell you in this session that how this trend line is plotted. But as I said earlier as well, here the trend line, the candlesticks chart, this was broken. This bearish red candlestick was broken, and this was an indicator that in future the prices are likely to go down. So this was on the basis of trend lines, candlestick analysis. Also, again, the Fibonacci tool was used again. Now this time, the Fibonacci bearish tool was used, which is called the Fibonacci retracement. So on this basis, when we plotted it on the chart, price chart, this gave us again 3 target profit levels, but this time going downwards. So here it was recommended to take the sell position. Now, as you can see, as I said earlier as well, target profit level 1 was very highly probable. Target profit level 2 was also likely to go, but less probable as compared to TP1, and TP3 was again likely to go. Here you can see from the whole thing that on the basis of fundamental and technical analysis, if someone had taken positions according to the analysis part, he would have made good fortune from this particular asset, just one asset. There are other assets as well which are traded in these markets. Now, this was just to give you, this was just, I would say, an eye-opener that no guessworks, only analysis, likely to make good amount. Now, as I said in the earlier part of my discussion, that we will be comparing the 3 types of financial markets on the basis of different parameters. First of all, the assets traded. In the stock market, we all are aware that assets traded are shares and bonds and debentures. There are other derivatives and other things, futures traded in the markets, but we are not going to discuss those because these are highly specialized. In the commodity markets, there are many commodities traded. But the three main categories of commodities that are traded in these markets are energy products, like oil, gas, coal, etc. Metals, including copper, nickel, some precious metals like gold, silver, etc. Then we have agricultural products like soybean, corn, wheat, cotton, coffee, and other products. So these are the assets that are traded in the commodities market. As far as the Forex market is concerned, it's the short form of foreign exchange market, and here currencies are traded. Now, more than 170 plus currencies are traded in these markets. The major currencies being US dollar, Great Britain pound, euro, Japanese yen, Canadian dollar, Australian dollar. These are traded in pairs. For example, we take a particular pair, euro USD. If the euro will be bought, US dollar will be sold, and the other way around as well. Now, in this current world, present world, cryptos currencies are becoming increasingly popular. These are called digital currencies. This is not a full-fledged topic covered in our today's webinar, but yes, cryptos are a reality. Digital currencies are a reality like Bitcoin, Ethereum. These two are very popular. There are others as well. So these are the assets which are traded in these markets. Now, when looking at the size or volume of assets traded in these markets, it is huge, humongous. Trillions of dollars are traded, of worth of assets are traded in the stock market every year. The biggest being the New York Stock Exchange. And also in the commodities market, trillions of dollars worth of commodities are traded every year. But in the Forex market, this is thousands of times the size of both the markets. And you can see that every single day, according to a Bloomberg report, every single day, 6.6 trillion per day of trading of currencies trading took place every day. And if we talk on the annual basis, quadrillions of dollars per annum. Quadrillion has 15 zeros by the way. Trillion has 12 zeros and a billion has 9 zeros. So quadrillions of dollars of trading in currencies is done by various investors and traders every year. Now, if these markets have a lucrative returns, these need to be very heavily regulated by the regulators. Stock markets are the highest which are regulated. This is in a way good as well, but these regulations have their own constraints as well, which I will discuss later on. For example, New York Stock Exchange in Pakistan, we have the Pakistan Stock Exchange, who regulates these markets to protect the interests of the investors, traders, governments, central banks, commercial banks, and even the brokers. All stakeholders' interests are protected looked into by the regulators. Commodity markets are very highly regulated as well. In Pakistan, the Pakistan Mercantile Exchange regulates these markets. The Forex market is relatively lower regulated as compared to the other market, but this does not mean that this is not regulated. In the UK, for example, the Financial Conduct Authority regulates the Forex market, but this is decentralized. Decentralized because there is not a single place like the Pakistan Stock Exchange where the shares can be traded from one central location. Although there are some alternative markets as far as the stock exchanges are concerned, but majority, virtually all the trading takes place from one central location in case of Pakistan, the Pakistan Stock Exchange. But in case of currencies, the Forex market, there are different brokers sitting in different locations. This is called the decentralized market. But it is also quite well regulated. Now, the next point is the liquidity as regards the assets that are being traded in these markets. The stock market, liquidity is high in all the markets, as you must be knowing. In the stock market, it's medium to high. Although most of the shares, they can be sold whenever one wants to. But some shares are less liquid as compared to others. Blue chips, they can be sold in seconds or minutes. But there are shares which are less liquid. This is, it may take maybe some hours or sometimes days if someone has a higher volume to sell. But also there are limits that are placed in many stock markets. Not all stock markets have cap and floor limits. In the Pakistan Stock Exchange, whatever is the opening price of a particular share, it can go up to a maximum of 5% and it can go down to a maximum of 5%. For example, if a share opens at 100, it can only have a price of 105. After that, you can only sell that asset, but you cannot buy it because the price is not going to go up. And similarly, when there is a floor, even then the shares cannot be traded. So that is why these two factors make this market less liquid as compared to the other one. As far as commodities are concerned, there are no caps and floors on the commodities traded. The price can go up as much as it wants to according to the parameters of demand and supply, as well as it can go down. So you can easily sell a particular commodity which you want to trade in. As far as the Forex market, the liquidity is extremely high. Within seconds, you can sell whatever currency you want to sell. Also, you can buy whatever currency you want to buy. Now, as regards the margins and leverages, in all the three markets, margins and leverages are available. But in the stock market, one can have margin. Margin means if you have 100 as equity, you can trade above that. For example, if 20% margin is allowed, for example, just saying. So if you have 100 as equity, you can do the trading to the level of 120. If you have a 30% margin, accordingly out of 100, you can have a leverage of 30. So this is, we can term it as medium. As far as the commodities market is concerned, that has much higher leverage and margins as compared to the stock market. Whereas in case of Forex market, it has extremely high leverage possibility. Even it goes up to 500, which means that if you have $1 of equity, you can do a trading to the level of, you can get a loan or leverage 499. So it has a very high leverage. But that needs to be looked into the factors of you all are accountancy and finance professionals who know the consequences, good and bad, of the principle of gearing. So one has to take the leverage according to the risk appetite one has and considering the risk and reward of that. Now, the participants or the players of these markets, you can see that governments, central banks, commercial banks, finance houses, brokers, fund managers, institutional investors, and retail investors and traders like you and me. These all are the players of these markets. I'm not going to discuss here the role of every player, the importance of every player, or how every player enters and functions in these markets. But this is just to give you an idea. This is just to give you an insight that how big the players are in these markets. And you and me being the retail investors or traders are the smallest players. So if there are other players, you can see how important these markets could be and how well protected these markets would be. Now, as regards how easy or how difficult it is to do business in these markets, all three markets provide very high opportunities as regards the ease of doing business. All you need is a laptop or a tablet or a mobile device, and you need to open a broker's account from where the funds can be transferred two ways, from the brokers to your bank account, from your bank account to the broker's account. So all three are very easy as regards doing business, trading, or investment in these markets is concerned. But comparing the three, stock exchange only works during the business hours in 5 days. So we can say 7 hours, 8 hours, 9 hours, it is open for that time. But as regards the commodities and trade Forex market, these are open 24 hours, 5 days a week. Now, this has a very important implication for you people and for myself, people like you and myself. If we want to take long-term positions of a buy or a sell, that is possible in the stock market, in all three markets. Because long-term position means you want to hold an asset, which is either a share or a commodity or a currency. For a long-term position, you may be holding it for weeks or months, and in some cases, years. You only have to take that position once. And in this case, in all the three markets, along with your job or business or self-employment, whatever you are into, it is easy to take a long-term position because you will have to do the fundamental and the technical analysis once, and that is possible during your with your job hours or everything or things like that. But if someone wants to take short-term positions, like for days or weeks, and sometimes even months, in days or weeks, so for a person who is on full-time employment or looking after his business full-time, it is not possible to do it in the stock market. But in the commodities, and especially in the Forex market, that is possible because these are open 24 hours a day. After your work hours, you can do the fundamental as well as the technical analysis. So summing it up, it is very easy to do business in all the markets, but in the Forex market, it is the highest because it is open 24 hours, 5 days. In the stock market, you can take long-term positions, but short-term positions are not suitable for you because it is difficult to look into it on daily basis. As well as the commodities and especially the Forex market is concerned, you can take both long-term as well as short-term. Now, a very, very important part of our webinar, the fundamental analysis. Now, we will look into the factors that affect the price of a particular asset that is traded in any of these markets. The driving factors of the price are just two: demand and supply. Higher the demand, higher the price, and vice versa. Right? Now, but we need to understand what are the factors that affect the demand and supply, because these are the ones that are going to take the price up or down. Now, firstly, the stock market. As I took the example of, say, Honda cars, the fundamental analysis for the share asset in a stock market would be firstly to look into the company's management, profile of the management, the philosophy of the management, the experience of the management. That will give an indication of the strength of the management, will give us an indication that the company would perform well, and accordingly its price would go up. Secondly, the financial statements. This is our forte. We have studied it. We have practically done it, being from the accountancy and finance community. In the financial statement analysis, we do the revenue growth, the profitability, assess the profitability, the liquidity of the company, the gearing, debt equity, working capital efficiency, and the growth factors, also valuations, dividend per share, earnings per share, and a variety of other financial statements analysis, ratios and tools and techniques. This would give us an idea if the company is performing well, its price is likely to go up. Then there are some industry specific factors. What is the demand in the industry, and what is the problems that industry is facing, what are the incentives provided by government to that industry. So if these factors are well for the company, good for the company, its price is likely to go up, and vice versa. Then there are macroeconomic factors at the national as well as the international level, like the state of a country's economy, GDP growth. If the GDP growth is good, there will be more income of the people, more demand will be created, and the price of that particular share is likely to go up. If there is inflation, people would be having less money, there would be less demand, and the price is likely to go down. Similar is the case with interest rates. If the interest rates are higher, then the prices of the particular asset in this market is likely to get affected by that. Then there is a very important factor, the market sentiment, which we call as the bullish trend or the bearish trend. Bullish trend means that people are bullish about a particular share. They perceive a particular share's price to go up. And if the people's market sentiment is bearish, all the people will perceive that the price is likely to go down. Some investors get by the market sentiments. And if everyone is saying that market is likely to go up, there is a probability that someone might follow this bullish trend and does accordingly. So prices are likely to get affected by the bulls and bears as well. Now, as far as the stock market assets are concerned, fundamental analysis or the fundamental factors have more weight as compared to the other two types of markets. Because in the commodities and forex market, there is not a single company which is involved. Here, the factors are more of a macro nature rather than of a micro nature. For example, if we discuss about the commodities market, if the income levels of people, that income level rises, more demand is going to be created. If the population is increasing, more demand is going to be created, and the price of a particular commodity is likely to go up. Another important factor is the cost and technology factor. So if the cost of extraction or production of a particular commodity is going down, for example, the extraction costs of oil go down, the producer might sell the asset, because if its cost level is going down, he might be willing to sell that particular commodity at a relatively low price. And if there is technological advancement, again, it can affect the price. As regards government policy, it also affects the prices of a particular commodity. For example, if the government gives incentives to, say, growers of a particular agricultural produce, the price is likely to get affected by that. Then there are producer organizations. For example, OPEC is a very popular and important producer organization, the organization of the petroleum exporting countries. Now they decide the demand, the production to be done for the oil, and that is likely to affect the price. If the producer organization, as I said, OPEC, if it decides to cut down production, the supply is likely to go down and the price is likely to go up. If they decide to produce more, the supply will be more, and that will affect the price accordingly. Then weather, that is mostly for the agricultural products. If the weather is good, there will be more supply, and it will automatically affect the price. A very important factor, interest rates and the US dollar. This I've explained earlier as well. If the interest rates go down, people have less incentive to invest in fixed income securities, and they move towards the financial markets. Also, the geopolitics. For example, I'll tell you with the example of oil. If there are sanctions on Iran, so a major producer is less likely to increase the supply of oil in the international market, and its price will be affected. If there is a war, like in case of Saudi Arabia, few months ago, the Houthis and the Saudis had a war, so the supply got disrupted and it affected the price. So geopolitics also affects the price of a particular commodity. Then sometimes investors have confidence in a particular stock and confidence in particular currencies. For the time being, if the price of a particular stock goes down, of a stock or a currency goes down, and if people have confidence in that currency that this is a temporary fall, so that will also affect. It is not likely, if the investors have strong confidence, the price is not going to take a lowest dive. Similarly, global recession or boom, that also affects the prices of commodities. If it is boom, the demand is likely to go up. Everything, economic activity will be more, and that will affect the price accordingly. Similarly, if there is a recession, it is going to affect the price as well. Market sentiment, I've told earlier as well. As far as the forex market are concerned, it also has some common factors, fundamental factors, whereas it has some different factors. Inflation rates. If the inflation is high, that is going to affect the price. If the inflation is low, that is also going to affect the price. Interest rates are also going to affect the prices of currencies in the market. Current account, if it is in surplus or it is in deficit, that is going to affect the price. Government debt. For example, if a country, say Pakistan, has too much debt in US dollars, that is going to affect the price of rupee. Terms of trade. If the exports are increasing at a faster pace as compared to imports, that was going to affect the price. Okay, sorry. Similarly, in case of recession, the price is likely to get affected. If there is political stability, the price of that country's currency is going to be, that stable. And also the monetary and fiscal policies affect the prices, and market sentiment also affects the prices of a particular currency. Now, this was the part that was to be covered by me. Now I would like to introduce my co-presenter, Mr. Raid Nazir, who has more than 20 years of experience in the financial markets, and he has also been a trainer and a mentor from the last 18-19 years. He has also taught to 17,000 ACCA students various papers, F5, F6, F9, P4, P6, and he has also been teaching to students of different qualifications, ACCA, CPA, CMA, MBA, and he has author of many books, and he has exposure of financial markets of more than 20 years. Right, sir, may I please request you, please.
Thank you very much. I have been waiting. So, for the convenience sake, can we switch the seats?
Yes,
If you don't mind,
please.
Thank you. Thank you, sir. Okay, Assalamu alaikum, everyone out there. Thank you very much for taking out time for this session. And first of all, I feel very lively coming within my own community, being an ACC member myself, fellow member myself. And I have spent more than 19 years teaching you all great people out there. Many good number of students, I hope, watching would be my students as well. Okay, now coming back to the topic, hopefully you were sending me questions as well. Let me see if there are some specific questions I would like to answer first and then go further to the analysis part.
Okay, so there is a question by Masood Ahmad who's saying how to capitalize speculations in stock market, how to identify whether share price movement is due to speculation or real change.
That's absolutely an amazing and very insightful question, actually. Yeah, this is something which I would say a trap, something known as a trap. This is something to be covered by me just in coming few minutes. This is a subject known as behavioral finance, and we will be covering this today. So I'll be requesting to just bear with me for a few minutes. I'll be coming on this topic of behavioral finance to this presentation. So any other questions?
Yes, one or two more questions. Only
Yes.
Salman Ali is asking, do we have brokers for Forex trading in Pakistan?
Yes,
like we have the stock markets.
Yes, the regulating authority in Pakistan is Pakistan Mercantile Exchange, under which a number of brokers are already registered. And in fact, in today's world, brokers exactly don't mean that they have a trading floor or something, a big floor with them with fancy seats and giving serving coffees and something. In traditional, I remember when I started this journey of financial markets back in 1999. The first broker I was introduced to, that was a Forex broker actually, it had a big floor with many PC computers, coffees being served and managers. In that era, the internet was too new. Actually, I still remember after giving the ACCA exams, I was waiting for my result to be announced and I was not sure how to make the email. It was such a new internet era that even you had to learn how to make an email. But in today's world, actually, Forex brokers need not to be huge in size. A numerous number of brokers are available online with their online web and apps on these mobile phones and these PC computers. So Forex brokers, yes, it's something that can be debated along, but for today, I would like you to have a good insight about exactly how to prepare yourself, exactly to see what are the opportunities within, exactly to understand what is the difference between being a professional in this market and what is meant by if you are not a skillful personal or professional, then how should you safeguard yourself and have good opportunities. So let me continue and I'll come back to your questions. And kindly, I would like this session to be participative. So when I'll be speaking, anything comes in your mind, kindly just keep on giving the question. After a little while, I'll come back to your question. But I would request you to remain within the slides I will be presenting. Questions deviating from today's subject will be different, will be difficult to cater. Okay, so as Mr. Asim well explained that there are basically two types of analysis. So if you are part of this financial markets, for example, just assume for a while that you are part of this market. So you have to analyze the price levels. At the end of the day, it all means that how you are analyzing the price level, irrespective it is of stocks, it is about currencies, it is about commodities, any asset. It is the analysis means that you are analyzing the price levels. Now, relating to your ACC studies, you have used some words in your studies which is known as interpolation and extrapolation. Now, interpolation means that the historical statistical prices which have already happened, you analyze them in a special using different tools and indicators, analyze the past trends, and then you try to forecast, not exactly forecast, just to explain, you just project the price for the future possible price levels, which is known as extrapolation. Now, this is it may sound simple, but it is not that simple, to be honest. And if we talk about the other qualifications, so these are advanced nature subject covered in a many months and many years of the subject. So what I want to tell you is there are two types of analysis. Once again, fundamental analysis, which Mr. Asim explained to you in much detail and much depth, and the other is technical analysis. If you ask about me, I would say that for a working professional who want to enter in this market, among these two analyses which can be mastered and out of which you can make a very good fortune is something which is known as technical analysis. That's charting. I'll be talking about that in much details. Why not fundamental? I've been coming on this point just ahead. When I talk about technical analysis, it is also known as charting. And this is a word, if you're not familiar with this market, this word was introduced to you in your ACC syllabus F9. I have been teaching F9 to numerous of ACC students for 19 long years. So I exactly understand your knowledge base, and I'll be considering that when addressing. So when it comes to charting, it is something like something in your monitor with the price trends going up and down and up and down, and you use a number of indicators and statistical tools and forecasting tools, which includes the list written over here like candlesticks, something a Japanese technique, Japanese research, which is very useful if used wisely. The support and resistance levels, often known as psychological price levels. The trend lines means it is an uptrend line, the prices are rising or prices are decreasing. What is the strength? The moving averages, you are very familiar with the averages, will come on this part later. Then RSI, oscillator, Fibonacci, whatever is written, these are basically indicators. RSI is very popular, like relative strength index. Oscillator means that how much it's oscillating in a particular direction. Fibonacci is basically a research and a research which helps you determine the price levels, and I'll be using this to explain you. And similar other words, I won't be naming them all because it's not necessary that all of you who are listening are known to are familiar with these jargons used in this market, these technicals. So the point over here is that I will attempt to give you an insight that how a combination of this analysis, like how a professional which is skillful uses these analysis to make fortune, to make profits, to make earnings, to make income and make wealth out of these markets. To give you an insight on this, I'll be using 4 real case examples today. One would be about Tesla, a very popular company, in fact now a blue chip company in New York Stock Exchange. You must be knowing about that because vehicles have a very strong brand name attached to it. The other will be from the commodity markets, that is the crude oil. Very interesting case study. I hope you will be enjoying this when I will be talking about it. Then I would be taking an example of a currency, that is USD, Canadian dollars. And today's session cannot be very exciting unless I can tell you something about cryptocurrency as well. And for that, I will be using Bitcoin as an example. For examples, the objective will be that I'll give you a glimpse that how the skills of analysis are used by professionals. I'm not talking about those people who use the guessworks, who are not knowledgeable. The objective over here is that you have an idea that how these skills, analytical skills, are used to make fortune out of this industry, this market. So starting with Tesla share prices, the example starts from the late year, that is late months of the year 2020, and in the initial months of this year 2021, Tesla made history. I'll just show you the charts. It was undoubtedly one of the most highly profitable opportunities, which was very easy to identify and very easy to catch. And when I say that, I means that I had enjoyed these profits in recent days, and I'm expressing all these analysis with a lot of joy because I have been trading this very successfully. Okay, so starting, this is the basic chart with no trend lines or indicators, nothing at all. It is basic. The only thing used in this particular chart, which you can see in your screen now, is based on candlesticks. So you can see some reddish, red colors and green colors and etc. Now in this basic chart, where at the moment nothing is used, the case study we are going to discuss is that in March 2020, approximately exactly 1 year before, this previous year, March 2020, the price of Tesla was $66 per share. And in early 2021, that is January 2021, Tesla hit 900, the price level of $900 per share. That is, it is more than 12 times of profits. Means anyone who could have tapped this could have, there was a possibility that he could have multiplied his investment approximately 12 times. But that doesn't mean that all the from 66 to 900 means major portion of this could have been achieved safely. Yes, a small portion was risky, which professional traders don't bother about. So what I mean by that? So please check your screen, and I'll be coming on the next slide. Now here, the first professional technical analysis. You can see I have drawn a yellow downward sloping line. This is known as a trend line in technical terms. So it might not be possible to go into very much detail, but I'll try to impart you as much knowledge which is possible within this short period of time. So this is known, this downward sloping line is known as the trend line. Now, a professional and skillful trader, what he does is that he waits for a clear position, that is a safe position where he can initiate his trade. For stocks especially, the lucrative moments are when the stock prices are rising. In case the stock prices are declining, in declining markets, it is very hard, not impossible, but very hard to achieve profits. The real profits in stock market lie when the prices are increasing. So just consider the chart in your screen. So you can see this downsloped line was broken. Broken means that the candles went above this line. At this particular moment, see your slide again. The RSI stands for, this is an indicator very popular known as relative strength index, popularly known in its short form, that is RSI. This shows the strength of any particular asset you are analyzing, the strength, whether it is downward or it is upward, with two levels indicating whether this particular asset is oversold or overbought, with natural common sense usage. That oversold means this is already too much on the low side, and these prices are going to go upward. And if the prices are oversold, means sorry, overbought, more bought, it means that the correction will be there and the prices are going to go downward. So coming back to the slide, which is open in front of you. So you can see when the prices hit $66 per share, the RSI hit the lower bottom, which is the oversold territory. Means now there was an indication that the price after here would be increasing. But there could be two possibilities. Number one, be ambitious, be impatient, feel a fear that you might be losing this opportunity. This is something which is known as emotional trading, and professional traders are not basically avoid this sort of sentiments. So without any sentiments, this was not a real position to enter. You had to wait for the point when the position is clear, and that happened when this down sloped trend line was broken. And for this, I'm coming to the next slide. When this there was a breakout of this downtrend line indicated with a breakout technical analysis pointed with an arrow in this slide. The another very popular and useful indicator known as awesome oscillator showed a clear divergence. It is basically a divergence whether it is a bearish market or bullish market. So there started a clear divergence that from here the bullish market starts. So this was, in the professional terms, a very easy pick, a very safe pick to profit yourself from this very good opportunity. So from here, coming to the next slide, it was a very good buy without any doubts, with almost negligible risk elements. On the risk element, I'll be coming later. So for the time being, we'll be ignoring risk and we'll be discussing risk in the later part. Okay, so it's a buy position. Now, no one in this world really knows that how much the price can go above. No one in this world knows. Simple as that. No matter whatever the qualification is, whatever the skill set is, no one knows the future, obviously, what is going to happen in the future. Who knows what is going to happen tomorrow? No one knows that. Even in fact, who knew that this pandemic, COVID-19 pandemic could hit in our lives? No one had thought that, because my age is I'm too much elder in age. So I never thought in my all life that I'd be seeing this sort of era of COVID-19. So future is uncertain, to be easy in easy words. So when you have bought, indicated with a green arrow over here, now you have to use some analytical tool to decide that up to where you would target your profits. In that context, a very good extrapolation statistical tool exists, which is known as Fibonacci expansion. Expansion means that if the trend continues, the word I'm using is if the trend continues in the bullish pattern, you can identify that what would be the next possible price level to be achieved. In this Fibonacci expansion, basically 3 price levels are predicted automatically by this indicator. It's not calculated by me actually. It is about this research which is already present, known as Fibonacci expansion. 3 price levels are given at 61.8%, means where the prices have broken, it will go 61.8% above the known indicated here by TP1, that's take profit 1. Then the next is 100 level, that is 100% of extension, and the rare possibility is TP3, that is 161.8% of the rally, that is the price. Now here the risk aptitude matters, that investor how much risk he's willing to take, and the risk aptitude varies from person to person, absolutely person to person. It's very personal, and this is theoretical to say that a risk averse person can turn into a risk taker person. It doesn't happen like that. Similarly, a risk taker person can become a risk averse. It really happens. It is something, an aptitude inbuilt in a human mind, that is your mind program. So you have to decide, you have to know yourself that what sort of a person you are. If you are a risk averse sort of person, then the TP1 is the safest, most still very profitable opportunity. So he should have gone to the TP1, that is take profit level 1, suggested by the Fibonacci expansion price level. So you can see in the chart that was very easily and in a short period of time achieved. But if you are a risk taker sort of person, means you believe in going and building big income and wealth, for example, with obviously certain parameters. So the last price level you can go for remaining within your skill set was the TP3. And no one knew that it will go till TP3 or not. So TP1 was very highly probable to reach, where TP3 was probable, but not as much probable. It was low probable. But in case of Tesla, what happened is that TP3 was even hit. So TP1, TP2, TP3 means there was a strong bullish trend. Okay. So anyways, you are a risk averse person or you are a risk taker person. In both cases, you have already earned your targeted profit. What you are targeting. Now, after here, what happens in Tesla? So I'll be coming up with the next slide. Kindly consider the next continued scenario. Now, coming on to the next slide, you can see the fundamental news circulating in the media started coming that the sales of Tesla vehicles has significantly increased in China, and that is one of the main contributing factor of the company's business growth. This was in media all the time, reported in all the mainstream medias like it was Reuters, Bloomberg, it was BBC, everywhere it was in news. So it was very clear that China has become a big market for Tesla, which was a very big business proposition for Tesla, very very good. But here, as a professional trader, it was very uncertain. Now, what to do next? Where can the price go? So this would be a little complicated. I hope I can explain you well. So kindly remain on your chart and consider. This TP3 now had become the resistance level, as you can see. But then this candle breaks up with no visible real technical or fundamental reason. Now, as a professional trader, unless you have a good reason, either on the technical side or fundamental side, it is not wise to jump into a trade. You have to analyze why you are taking the trade. Means you have to have a proper trading plan. You must have a proper strategy. You must have a proper risk management. Everything should be there intact. And I'm saying this all to you all because we all belong to a highly educated community. So we have to think in a way like a skillful, educated person thinks. So thinking in that manner, now consider the chart once again. The TP3 was broken by a bullish candle, but no clear visible reason was out there. So what now a professional analytical trader should have done? So I'll be coming in the next slide. In the news has started circulating that apart from China, a number of good developed countries have also, the trend of electric vehicles has suddenly come into trend, and more electric vehicles are sold in those countries which are rich in resources. So the trend was continuing, but still there was no such clear pattern that where to initiate the trade. Please see in your slide, I am changing this slide. Now from here, this is where the professionalism comes. Now again, a downward sloping trend comes into play. The professional trader has made this downward trend and he is waiting like a professional very patiently unless he's very clear on his trading plan. And after this all patience, finally the day comes when this downward sloping trend line is broken with this bullish candle. That's green candle, as you can see in this cursor, if you can see the cursor. At this moment, a very important fundamental news hits, which is written in the white font. Tesla is included in S&P 500 for the first time, and this is a very big news. So, a very big news, and because of that, the trend line breaks out actually, and this is now a perfect buying decision. So trend line breaks out from the technical analysis, fundamental analysis already going in the media. It's already from many months that the electric vehicles are in the trend, and the S&P 500. The S&P 500 index includes giant companies like Facebook, like Google, like Apple, and you name it. It's all the blue chip companies. So Tesla suddenly is included in the S&P 500 index. Once that happens, it was very clear now this Tesla has turned into a big giant. And this was a very good buying position. And on the one indicator to explain you, another very popular indicator is known as MACD at the short form. You can see in this diagram, MACD showed a clear divergence. So on the fundamental side, Tesla was included in S&P 500. On the technical side, two events happened. MACD showed a divergence, and the trend line was broken upward. So a clear, safe, very safe investment to be initiated. But the next question comes again. Okay, the buy has been initiated. You have bought this stock. Up till where you will hold it? How much profits do you want to target? Because future is uncertain. No one knows about that. No one exactly knows what is going to happen in future. So you need some extrapolation, statistical tool. So in that case, again, we will be using Fibonacci expansion, which was once mentioned by Mr. Asim in his previous board example, and I have also used that example, that tool in these slides beforehand. So we'll be using that again because there is a bullish trend continuation. That is, the trend is continuing. So coming back to your next slide, kindly see this slide. Now the buy has already been initiated. This arrow where you're seeing is exactly matched to the previous slide. I'll show you the previous slide again. So that is exactly the same point. After initiating the buy, which is a very safe buy, the Fibonacci expansion should have been used, being a professional, skillful, technical analyst. And from here, this expansion should suggest to you till where the price is going to go. And again, the same amplitude comes. If you are risk averse, you can be assured that the TP1 level will be hit. And that's a sufficient amount of profit. But if you are a risk taker, this analysis itself told that the next probable price level will be TP2. And that is where the Tesla hit in recent months, that is $9 per share. Yes, there is a TP3 as well, but that has not reached yet. And the days and months keeps on continuing. So this is how a professional analysis is done using technical analysis, different tools. And I have been teaching myself F9, P4, financial management, advanced financial management, F5. And this includes a lot of decision-making rules, the management accounting techniques, decision-making techniques. And then in my long 19 years of ACC teaching career, along with these financial markets, I exactly know how wonderful your mindset is, how wonderful knowledge you have, and how easily you can equip yourself with these so much lively analysis. I myself belong to your community, and I myself, obviously, as already introduced, a fellow member and my senior one, white hairs in my head. Actually. So point is that this session is basically to give you a real flavor that how you can equip yourself with real professional skills, and these are really wonderful skills to have. Okay, coming to the skills, I'll be coming back on that later. Now coming to our example number 2, that is really a wonderful case study. It should build your knowledge and at least something knowledge you can gossip with your friend. So the next example, kindly see on your slide. I will be discussing about crude oil prices. It was a simple, very simple take, profitable opportunity available, which was existent with very minimal of technical and fundamental skills, which could have been cashed in the recent year and recent months. So I'll be explaining that. So first chart to discuss that, what I'll be discussing. The event to discuss today is about crude oil. In January 2020, remember January 2020 was the month in which it was not yet clear that this COVID-19, which had already spread in Wuhan, China, will be able to spread in whole the world. Means it was not yet a pandemic yet. There was fear, but it was not a pandemic. And the lockdowns had not started. The only lockdown, the first lockdown witnessed was in Wuhan itself, that is China. Now, you can see at that time when the world was normal, only fear existed, but actually the pandemic was not apparent. The normal price level was $65 per barrel, I'm talking about crude oil. And then suddenly the virus widespreads, and the World Health Organization (WHO) formally announces that the world is now in a pandemic, and the measures have to be taken. And that was the moment when the countries, one after another, started the lockdown. So now kindly see the chart, the next chart I'm showing. In the next chart, I show you a very strong psychological level, a straight horizontal line known as support line. You can see this line was touched a number of times, but the price never went below that when the world was operating normally. But when these fundamental news hit, which I have written in the white font, COVID-19 pandemic was confirmed by WHO. Lockdowns had started in other countries after China. Now it was very clear and very common sense based analysis that once the lockdown starts, the road travel and the air travel will be limited, maybe limited to a major extent. This was very obvious. At that particular time, a technical event happens, which is known as technical analysis, that this support line breaks. As you can see, where my cursor is, that this has broken down. Now, this was a clear sell, means it was absolutely clear that this is a very highly profitable situation if you go for a short position. Now, here I would like to take a small break before explaining. Three types of markets: stock markets, commodity markets, and forex markets. Stock markets profitability positions are normally, exceptions could be there, but normally are present when the prices are uprising. In a downrising prices, it is very hard, near to, you can see a very unfavorable circumstances that you can profit out of declining market. Normally that doesn't happen. But in the commodity market and the currency market, the price changes whether it is on the upside or whether it's on the downside. You can make exactly equally profit. Means a person who has taken the sell position over here is very much good position as he would have taken the buy position. It doesn't matter actually. So you can take, this is known as swing trading. Means you can take the either way swing, markets going down or markets going up. Okay, so coming back, this sell position. This was very clear, simple, a very big opportunity. But the another point was, future is uncertain. No one in this world knew that what is going to happen next. No one knew. So till where this position could have been opened, because the world has gone into something, a situation, something which had never happened in a century. So this was something like after a century. So this pandemic followed 100 years after the previous pandemic. No one knew what was going to happen. So how long this position should have been held? This is interesting. For that, now the next insight for you all. I'm coming on to the next slide. Kindly see the next slide. Here, a very important analytical tool known as moving average should have been, because you don't know how much the price is going to go downwards. So moving average is something which indicates clearly where the direction of the price. So, and it also works for as a support and resistance level. Means the prices, it's not easy for the prices to break the moving average all the time. So here, if a professional, trained, analytical, skillful person would have taken a sell position, he would have used moving average to monitor his position. Till the moment the moving average is downwards, as you can see this yellow curving line, which is the moving average, the prices are down, the prices are below this moving average. There is no need to close the position, you can hold the position. But what happens next is, oil makes headlines. The future contract of oil comes into news, which informs that after a very long time, the future contract price of oil has turned into negative value. The future contract price, not the spot price. However, on the spot prices, it hit a historical low point of only $6, and this happened only in a matter of approximately 2.5 months, starting in January. and ending on the March. That is approximately 2.5, 3 months. In this 3 months, history was created. Now this was enough. From this yellow spot, $6 to this blue mark profit level, anywhere where you have where you wished according to your risk aptitude, you would have closed this position, take your target. So this is one side of the story. Now the other side is, after the lockdown started to be lifted, after the lockdown started to be lifted, and oil prices have gone to a level which was not sustainable for any oil producing country, and it was not cost feasible for the oil drilling company, that is oil producing companies. At that moment, it was again a common sense application that the prices cannot remain here for long. So from here, a long position could have been initiated. Long position means that you could have bought this asset, that is oil, and you could have kept it for a long term. For that, 2 points. Number one, the moving average is broken by a bullish candle where you can see this downward. Where my cursor is right. Okay, so the other important point was that will be explained in the next slide, and I'm turning this slide. So the next slide shows this is a downtrend line. A bullish green candle closes this, talking about professionalism, being a professionally trained and skilled. It is now very clear that this is an excellent opportunity to cash, obviously with a common sense also that prices cannot remain at this level. That is not possible. That is not feasible for any oil producing country. So it had to go up. So technical line broke up, and this was a clear buy. And after days and months, the news came on coming, which is known as fundamental news, that one after another the countries are going lifting their lockdowns. The road travel has started to come into normal. The air flights have resumed, and so on. The demand of oil started increasing. And the last point in this example to explain is, okay, what should have been the take profit level? The take profit level. Now, technically speaking, the resist support line which was broken, because of which this all event happened and this very good trading opportunity appeared, the prices had to go back to this level marked as take target profit level 1 in this diagram. This is for the risk averse aptitude people, but who love to go for a big move, for example, who's more likely to take who's more likely of a risk taker nature. He could have waited for the price level which was before the pandemic hit, that is $65 per barrel, that is January 2020. If he had waited till then, it was obvious that this oil prices will come to its normal price level. It's just a matter of time, and that happened in this very month, that is March 2021, that this $65 was crossed in terms of price level. Hope you're enjoying, and there is some knowledge and there's some insight as well for you, at least for gossips, if I can tell you. It's very nice to talk with your friends and talking about oil, what happened, what could have happened, what happened to Tesla. Obviously, if I would have been, when I was of your age, I really loved gossiping these sort of things. Okay, so I'll be coming to the next example, but before that, may I ask Mr. Harun, that are there any questions so that I can entertain alongside?
Yes, there are a couple of questions. So Salman, for example, is asking, the similar analysis apply to local companies as well? I think we talked.
Yes, absolutely. And so there are two types of analysis: fundamental analysis and technical analysis. And this question has I'll be addressing later on, but for now, for the stocks, for local companies, the technical analysis are relatively less important than fundamentals. So yes, these techniques apply to any asset around the globe, whether it's local stocks or New York Stock Exchange stocks. It applies to everything. Yes, it's applicable.
Okay. There are a few questions that people are asking whether they can get these slides. So the video recording is of course going to be available.
Yeah, I would, with very much apology, I would like to say that it won't be possible to make these slides available, but yes, this video will be available so they can have this knowledge.
Great. Okay. Great. One last question saying, please explain the trading mechanism of fixed income bonds and secondary markets. So can we take this question afterwards at the end of the session?
Yeah, this is something which is not covered in today's session.
Yeah. And the final question from Baba Khatak is, how much value is being given to the notion of value investing, an approach propagated by Ben Graham and Warren Buffett by today's investors in Pakistan?
Obviously, the financial market is something which is not much a skills, as I have already spoken, that all the businesses need some skills, but in Pakistan in particular, these skills are not imparted in an official level or in a professional level. So, talking about the big giants like Ben Graham and Warren Buffett, yes, they speak about very good philosophies. They are very good motivational speakers as well, along with very good financially successful people. But speaking about Pakistan, uh, the knowledge on both technical side and fundamental sides are something which has not been imparted to Pakistani public actually. So they are well below that. So I cannot say that anything. Today's investor in Pakistan is nowhere near to what Warren Buffett and Ben Graham is. Obviously, that's very natural. So that is something, an initiative that we have been taking, that this knowledge should be imparted in such a way that this becomes a part of at least the accountancy and finance profession. So they'll come to know about this more, and if anyone is interested, they can make this as a part of the
Two very quick questions. Abdul Wahab is asking, what are the different techniques used in technical analysis, and does that require statistical knowledge?
No, that does not require statistical analysis. For example, like for example, I was talking about Fibonacci expansion. Fibonacci expansion and Fibonacci retracement is a statistical tool made by Fibonacci. Now that is available in a software form. But our job is to just apply the software at the right moment when it's required. So we are basically the decision makers and the analyst. We are not at all something like statistics. We need to know about some statistics or all. That's not our part.
And last question, I think, is very much current affairs, COVID-19, the current situation,
What about the
stock market, how the points there.
So something
Prediction.
Yeah, prediction. This is now whoever has asked this, man, Jalaluddin, yes, I really appreciate you have asked this. To all my students, so these financial market students, I simply tell them, please forget predictions. Predictions are basically guesswork. Yes, I absolutely understand that prediction is something that a human is naturally immune about. What is going to happen tomorrow? What is going to happen to this current prime minister? What is going to happen tomorrow? Whether it's going to rain tomorrow or not? Whether it's going to be sunny tomorrow or not? The simple thing is, the person who can get out of these prediction thing will be very profitable and very successful in this market. The person who holds this sort of sentiments or predictions cannot be successful, and I stand on my words. So please avoid this prediction. This is something which you have to learn to avoid if you want to make a fortune, any sort of fortune. And so prediction is nothing. In Urdu, I say it najumiyat. Right? So you don't have to be najumi actually.
I think that's all. So
Okay, so I'm welcoming your questions again, and I love the people who are vocal. I love the people who speak out what they want to know. Unless you can speak out and you can ask me, you should not presume that everything can be told without asking. So I'll be looking forward for your another very good questions, and I appreciate all the questions coming are relevant actually. But which are not covered in today's subject, I'll be just excusing it for the another session. Okay, so continuing, hopefully you are enjoying the case studies. So the next case study I would like to discuss is about a currency. And in this case, I will be discussing Canadian dollars. Another very lucrative opportunity that arose in year 2020 and is still prevalent today when I speak. So starting with the chart, here I have written it was a highly profitable opportunity which was very easy to identify with technical analysis, but in this case fundamentals were not useful. Now technicals and fundamentals I will be discussing in balance about the two later. So ignoring fundamentals, only technical, how the opportunity could have been cashed. Now this is the case study. Now again, this is a raw chart with no sort of analysis, no sort of line, no sort of indicators. Now what we are going to discuss is in March 2020, approximately exactly 12 months before, the price of Canadian dollars was 1.466 as written in this slide. And in this month, March 2021, when I speak, the prices are around 1.236. And in this whole 12 months, the price had continuously decreased in a bearish trend with no sort of thrill or hiccups or risk triggering of any sort. So a position which remained intact for one long years. Okay. So technical on the technical side, and this is something once again in stock, this sort of situation is something which is a headache. You cannot take a real or you cannot profit out of it easily. But in currency and commodities, this is as good as a rising market. It is a falling market or rising market, it means same. That's why when you Google about the Forex or commodities, you will find written a phrase something like this, that these markets are recession-free markets, means there is economic recession or economic boom. These markets always give you opportunities. So having said that, coming back to the case study, so one long 12 months period of continuous bearish trend, a highly profitable opportunity, which would have been encashed through technical analysis rather than. So now to explain this, how this was to be encashed. So in March 2020, when the prices hit 1.466 on the charts, it was clear that it has hit after approximately 3 years. In January 2017, it was back then also at the same price of 1.466, and above was a very strong resistance level. Resistance level is a horizontal line, which is known as a psychological price level, in which the prices hit but are not able to cross. So that price level just came. There's another technique. Obviously, all the techniques cannot be even named today, but another technique is known as chart patterns. What a pattern is going on. According to chart pattern, it was known as a double top pattern. Again, an indicator that the prices are going to go down. So number one, strong resistance hit, indicating prices are going to go down. Number two, double top chart pattern, again an indication that the prices are going down. Coming to the next slide, the RSI, I have named it approximately third or fourth time today. The relative strength index, which shows the strength side, was in the overbought category. Territory. Overbought means if this particular asset is overbought, that is more than its fair value. It's above its fair value, so it has to come down. This also indicated. Third indication also showed from RSI that it is going to go down. Fourth, the candlestick patterns are very interesting. Very interesting analysis. According to candlestick pattern, I have written in this white font and indicated with an arrow. A candlestick pattern appeared known as hanging man. Again, the fourth indication, clear indication from here onward, the trend will be bearish. Not the move, the trend means a bearish move has to come. Four clear indicators, which all suggested the same. Which I mean to say is that it was very easy to do. And anyone who had sold, that has taken a position on the downward side, would have profited for continuous 12 months up till now when I'm speaking. So this is something which financial markets offer you, and this is not like which had happened in 2020 or which will happen once in 2021. This is something which I have been seeing every years after every few months from in these long 21 years I have been associated with these financial markets. So these opportunities keep on coming repeatedly. So this is not something which is abnormally happened due to COVID-19, not at all. This is just a normal pattern and this keeps on happening. All that is required is that you must have the skills to encash this sort of. Okay, so as I told you, something very fascinating in today's world, this decade which has just been over, cryptocurrency always remained in headlines. And when I talk about cryptocurrencies, the leading currency among those is Bitcoin. And many of you might already be following it because it is all over swimming in the on the internet. So today's session, without discussing Bitcoin, I think that it would not be justified. So I'll be very quickly going through it. All the analysis, whether it's stocks, cryptos, currencies, commodities, all the technical analysis being same. So Bitcoin, what happened is in this very month in which I am speaking, Bitcoin has hit 61,000 USD. That is one Bitcoin is equal to $61,000 of USD. And I can recall myself back in 2011 when my eyes can remember, I can recall that I had seen this figure something around 10 point something, 10.17 to 10.1. And I, the same person, after 10 years can see the same thing which was about $10 is now $61,000. I don't know what new things are going to come in the coming days. Anyways, it had made history, $61,000 for one currency. Anyways, how this could have been taken, I'll be quick on this. The same technique. Now again, to explain you in a very brief manner, there was a long-term downward sloping trend line coming, marked in yellow in this. In July 2020, this trend line broke, which meant that the skillful trader could have taken a buy position from here very safely. But you can see from July 20 to November 20, approximately 4 months, approximately 4 to 5 months, the price remained on the same level. And basically, many of the buyers were discouraged about that. But the skillful knew that ultimately the direction will be upward. Now, again, how much upward it can go? There are another analytical skills, including, yes, the Fibonacci expansion as well, where you could have predicted. But the point will go too long. So here I would like to conclude it. So a point taken over here, according to your risk aptitude levels, you could have profited as much as you can think of. The prices moved purely on technical grounds and there was no fundamental. Trust me, no fundamental grounds. Unless marked in this white font and marked with this arrow, where my cursor is at the moment. At this moment, yes, a fundamental news also joined in when the upward rally was going. That Tesla had announced that for its products, it is now accepting Bitcoin as a payment. So for buying a Tesla vehicle, you don't need to give any US dollars or a country currency, fiat currency, which is known. You can even pay now with Bitcoin. And that was a big noise, big news, sorry. It was a big news for the cryptocurrency world itself that its acceptance has gone so much high that blue chip companies are also accepting it. And that resulted in a further rally about recently hitting in this month $61,000. And yes, now what is going to happen, it all depends upon the technical analysis. But for today's session, it was all about giving you an insight how analysis is done and what is meant by professional trading, professional investing, what is meant by technical analysis, what is the importance of fundamental analysis. To take a very short break, before going for a short break, I will just like to conclude on these two sort of analysis. So ultimately, there are two analyses: fundamental analysis, about which most of the insight was given by Mr. Asim. I was mostly speaking on the technical side, which is the difficult part. Now, the first question which should arise in your mind: we have to see both the things, fundamental analysis and the technical analysis. Charting skills also should be there, and you should know about the current affairs, about the micro and macro, both sort of information you should be having, which is difficult to analyze. So the answer is, in simple words, fundamentals are always difficult to analyze. Means you being an accountancy and finance professional, and I'm sure you are doing very good in your profession. So your one of the mainstream career you are pursuing could be about accountancy and audits and financial analysis. and something like that, in which you are doing a lot of analysis to conduct your audit procedures. You are doing a lot of ratio analysis to ascertain the company's financial health and etc. etc. That was never easy to learn actually. You had to spend many months of syllabuses, heavy syllabuses to equip yourself with the skills so that you can do these sort of analysis. So in easy words, fundamental analysis is something which is big in nature and not very easy to conquer. Whereas technical analysis, for me at least, these are very lively, something new to understand, not that much big or having so much big of scope that cannot be mastered. So technicals are easy, fundamentals different. Now, kindly consider this slide. I hope most of your questions will be addressed, which are coming in your mind, should be addressed over here. Fundamental and technicals. For stock market, any stock market in the world, the share decisions has to be taken majorly on the basis of fundamental analysis and less on the basis of technical analysis. Technical analysis does work, but it is not that effective as much fundamentals. So that is why it is difficult, because fundamentals are difficult to analyze by the nature of its subject. Now Forex, come on the last column. Forex is majorly based on technical, like I have showed you the two currencies, Canadian dollars and Bitcoin. It is majorly based on technical analysis. Fundamentals do apply, but that is a very small proportion of it. For example, for decision making, to go into this, taking a decision about buying or selling, you'll be considering both technical and fundamental points, but technical will be more than 90% and fundamental will be less than 10% to be considered. So that is why this makes it easy to profit from Forex markets, because technical skills can be mastered in a shorter period of time. And technical skills are very highly effective when it comes to Forex markets, not for stocks. And commodities are in between, that is, both fundamentals and technicals are equally balanced, 50-50. So from easy to difficult, if you ask me, I would say Forex markets are the easiest to profit. Stock markets are comparatively difficult to achieve profits, out of which commodities are in between. And may I request Mr. Haran, so we can go for a short namaz break.
Yes.
And I will be coming back, giving you a remaining few insights, and we'll be discussing about you. How should you think? How should you look forward in your profession, in your career, about these financial markets? So we'll be coming back. Hopefully, you will bear with us. So we'll be going for a very short 10 minutes Maghrib break, Maghrib namaz break, so that we can offer the namaz. And I'll be coming back to you very soon, most likely within 10 minutes, inshallah. Okay, so welcome back. Hope you also have after you have taken a short break. The short break is refreshing anyways. Okay, so coming back to concluding points of these insights about the markets and everything, and then I'll be taking your questions and discussing about what great things have this markets in offering for you or financial accountancy and finance professionals. Okay, so now being an F9 and P4 teacher myself for a very long time, I would like to relate these three markets on the basis of efficient market hypothesis, which is something you have studied in your financial management syllabus during your ACCA. Now, in the efficient market hypothesis, there are three forms of efficiencies. That is weak form of efficiency, strong, semi-strong form of efficiency, and strong form of efficiency. These efficiencies are based on a number of factors. Among those many factors, the key four factors I have taken into account is the information availability, how easily the information is available on the basis of which the decision can be taken, the cost of transaction, mean any asset, that is if it is stocks or commodity or currency, the cost of transaction, buying and selling, what cost is there? That is normally the buying and selling price has a difference, which is in technical terms known as spread, and in general language it is known as commission. So the spread, how much high it is. So the good thing is that the transaction cost is very low in all the markets, but the lowest is for Forex. The information availability, if I talk about that, that is the first point to consider. Macro level information on the government level that is highlighted in the media all the time with multiple media sources. So it's very unlikely that information can be manipulated by a single government or a single institution or a few group of institutions for commodities, which affecting the commodities and forex markets. So that those are very easily available and freely available in today's world. But for stock market, the problem is that you don't only need the macro level and country level and international level information. You also need, in addition to that, you also need the micro level information, that is the company inside information, how its management, how it's managing its capital, its working capital management, the business plan, business growth, the dividend policy, and so much of things, which is not compulsion for a company to disclose to outsiders. The main compulsory information is definitely reported to the shareholders as per the legislations, but those are not sufficient enough to enable a good decision making on behalf of investor or trader. So there is limitation. That is why the efficient market hypothesis research itself suggests that in most of the developing countries, the stock market exhibit the weak form of efficiency. But in the developed countries like New York Stock Exchange, London Stock Exchange, Tokyo Stock Exchange, these are near to strong form, have not achieved the strong form of efficiency, but near to strong form of efficiency, which is termed as semi-strong. Insider information, as today the subject was introduced, assuming in the financial markets, that yes, there are insider information, there are some such players who take advantage of the certain information which is not available to public but to them. So, for example, you are employed in a company in an executive position, for example, and you come to know 10 days before the dividends are going to be announced. Or you have some sources or resources which lead you to this information 10 days before the company is about to announce its dividend in public. Now, this information which you have obtained 10 days before is obviously not illegal. It's not that sort of crime that you can be penalized or sent to a jail. But this is something which is known as unethical. And people take advantage of this. This is a cruel fact, and a lot of examples are there in the articles, and there you can find good Hollywood and Bollywood films also. This is a cruel reality that information profiting from the insider information to advantage yourself at the expense of others is very much prevalent in the stock market. So insider information can be effective, but that is not at all a possibility in commodity markets or forex markets. For example, just consider the case example I just introduced you today, the oil. The oil prices crashed And what that meant to the oil producing countries, like for example Saudi Arabia, the Russia, the USA, the major oil producing countries, just imagine that the price has fallen well below their cost of extracting. The government could do nothing. There was no such information which they could have uh, saved themselves from this situation. So commodity markets and forex markets are on such a macro level and so immensely huge size that insider information is not effective to gain in these markets. Yes, but in stock markets, examples of there are hundreds of examples. So this makes stock market not that much efficient. It's semi-strong or weak. And in this insights, the last point is ability to dominate the market. One of the criteria to decide whether the market is efficient or not is that whether there is a possibility that a few rich individuals get together or a few institutions get together and create an illusion, which was once again asked in today's question by one of your fellow colleagues, that is it possible that the prices are manipulated and illusion is created? So yes, stock market, there is very much possibility because the size of stock market is not that much huge. It is possible for big rich individuals, big funded institutions to play in the market, they dominate the market. So what they do is they select a particular asset, start buying it, the shares of that, creating artificial demand without any specific reason. So much so that the prices, because of this artificially created demand, starts increasing. And the other general public are not aware of this gameplay. What they can see is only that the prices are rising and there is profitable opportunity. So the remaining public becomes the followers. That is, this is a trap actually by these people who use this as a gameplay. This is something you had studied in your ACCA paper, specifically F9, titled behavioral finance. Now, behavioral finance is a very big subject. So, as in a very short, in a nutshell, I will be able to explain you. Yes, this behavioral finance is possible in stock market, and it happens all the time. And one of your colleagues just asked today that how can you distinguish whether the prices are on its real value, its intrinsic value, or it is artificially created. So that's something what is known as fundamental analysis. Now, for that, you have to research a lot with fundamental analysis and bank on your fundamental analysis, which is a difficult job. That is why making profits out of stocks is comparatively difficult. But Forex in particular, and somewhat to commodities, it is much more easier to gain more profits from stock market because such sort of gameplays does not exist in currencies or commodities at all. So you don't have to worry that the prices are artificially created. There is nothing like artificially created in these currencies and commodity markets. So you can say that this thing goes in favor for the Forex markets as compared to stock markets. Transparency, this whole session was about information and analysis. If you have information, you can do analysis. And if you don't have the reliable information, obviously the analysis cannot be that. The stock market, the only problem is that apart from the macro level information, you also need to know the company level information, that is the micro level. And I have written in the slide, they're not necessary, but there is a possibility of manipulation by the company, which may mislead the investors. And our whole of our studies and experiences being a part of the accountancy and finance professionals, we know what tricks and techniques are used to window dress the financial statement to show rosy picture of the company affairs and company's financial health. So this all is a reality which everyone should remain aware. But this thing is not existent in commodities and forex, and especially about the currencies. Just Google after this session and you will find written in many reliable sources that forex is considered to be the most transparent industry in the world according to the statements written on various reliable articles. You will find easily. So the most transparency is in currencies. So I'll be coming to the concluding part and then addressing your all the questions possible within this session. So to conclude, financial markets are by far the largest marketplace. Marketplace in the terms you can buy and sell various sort of assets in the world in terms of trading size and volume. No other marketplace can match these three markets, which has been discussed in today's session. In fact, equivalent to trillions of dollars exchange hands every single day. These markets are immensely huge. Many millions of people around the globe make fortune in financial markets every single day. Now here, I would like to share, because I'm myself a professional in these markets, financial markets, having more than 21 years. So I keep on reading the news because it's part of my job. So I would like to say that in January 2021, the statistics released showed that the average number of people per day in January 2021 were 10.3 million per minute. It means that the few minutes the count was high, in a few minutes the count was low. I'm talking about the average. So 10.3 million at every single minute in this market. So many millions of people are involved in these markets, and because of that, because of its huge size, there is virtually no limit in the terms of financial possibilities in it. I hope that today's case studies can explain itself a lot. Like for example, if you had timely bought the Tesla shares, you can make a very big fortune. If you had sold the Canadian dollars, according to technical analysis, you could have made a lot of fortune. But that, having said that, I'm not discounting the risk aptitudes. For example, if you say to me, if none of you want to ask me, sir, how much of you have in cash? So I can say I have encashed each of every situation I have discussed in this presentation. But according to my risk attitude, now I need not to disclose that I am a risk averse or a risk taker aptitude. I know my aptitude and I take profits accordingly. So that depends. So virtually there is no limit. There is no financial possibility on a market where trillions of dollars are in flow. Your few thousands of dollars means nothing. So for you, that is accountancy and finance professionals, my words for you are, I'll be reading this, kindly hear my words, what I'm speaking and trying to explain. Like any profession or business in the world, success is attributed to having the relevant skills for that professional business. You are a successful auditor or a financial controller, or a financial manager, or an auditor, external or internal, whatever. You happen to be successful in this career because of what? Because of the excellent knowledge and skills you acquired because of your ECC qualification. Simple as that. Otherwise, how could have you pursued this sort of very rewarding careers? The people who are not skillful speak some stupid sort of words and information that is not considerable. So point is, this is also a profession which is a business which is very big, about the markets which is very big. To be successful, the simple words, you must have the relevant skills. Otherwise, it would be very hard to say that the next person without a skills entering in this market is actually trading or gambling. Means if you don't know what you are doing, if you don't have a trading plan and you are just buying or selling an asset because of your inner feeling or listening to some rumors, market sentiments, means you are just betting on something you do not know. So obviously that is not the correct way. So that is not right. So acquiring skills is the key to success, and the biggest mistake people make is that they start investing trading without adequate knowledge and skills. It's an open secret. What do you assume? That most people are successful or unsuccessful in this market? Obviously unsuccessful. A very obvious reason, because this market does not have any entry barrier, and even anyone with a deep pocket, with no knowledge at all, just enters it with a gambling mindset. Gambling is something on which you cannot bank in your. So more than 50% are failures, and less than 50% in this market are successful people who understand that to be successful, you must have the right mindset and the right skills. And the good news is, which I have written, which I endorse, and I stay on this statement. I, being an ACC myself, I have benefited too much in my whole life because of my only because of my ACC qualification. The other designatory letters I have with my qualification, that are because of ACCA. Primarily, I started with ACCA. I banked on ACCA. I always banked on ACCA. So ACC community, because I know your knowledge base, ACC community does have the relevant knowledge to their credit, which places them in a good position to be successful. Thanks to the wonderful syllabus that you have studied in your ACC qualification. I know that being a teacher, my almost 2 decades, I have been teaching that, and I myself am the same qualified and belong to your community actually. So I know exactly what wonderful mindset and knowledge base you already have acquired because of your ACC qualification. And this is not because I'm speaking on the ACC platform. I really mean that. And what you need is, now, what next? What you need is proper training, after which you will be able to relate your knowledge. There must be a training which can relate your existing knowledge with these skills. You have to equip yourself, which includes technical analytical skills, fundamental analytical tips, money management strategy. Obviously, this is about financial management, risk management strategies. Needless to say, if you are not doing it skillfully, there is risk involved. Not to take risk, how not to take risk, how to hedge the risk. The word hedging is according to the syllabus. How to hedge the risk, and these all to do with an entrepreneurship correct mindset. These all are required, which can be done if you can have a real good training or a mentoring. So, to conclude, opportunities for you, those who take relevant skills, I'm going to be bullish straight away. You have very good opportunity to work in a part-time for investing or trading to make fortune out of it. And a number of students who have already taken my course on financial markets, in fact, belong to investment banking and banking sector. They gave me feedback that their job roles have improved, that is also a possibility. We belong to that sector. But apart from that, as a part-timer, you can do very good because a market which is 24 hours open, and after doing your 8 to 10 hours of daily job, you have ample after hours available to succeed in this market. So this is a very good part-time opportunity. And for example, if you even don't have the investment, then even then, this is such a lucrative and big industry. If you have relevant skills, the freelancing opportunities and related to advisory and technical stuff, the popular freelancing websites offer you a lot of opportunities which are highly hourly rated, starting from $30 per hour to $100 per hour in the normal. In fact, I and Asim Saab, I and Mr. Asim are providing a consultancy, a sort of consultancy and advisory to a limited number of clients abroad. And at times, not always, but at times, we need extra helping hand for ourselves. And we look for the relevant freelancers, but they are not easily available. So this market has a lot of gap for employability within itself, within it. So in a nutshell, to conclude, before taking your example, this is the last slide. At the end, to conclude, financial markets offer high opportunities for not only generating regular income, like for me, I feel myself blessed that in the year 2020, when the pandemic resulted in a lockdown and most of the people were forced to stay at home and work, I was already in this market and I was very happy working at home. I never felt the urge to leave my home to for work. And I was earning, to be honest, much more than I was earning in my relevant profession. So it not only offers you regular income opportunities, but also wealth creation, like today we have discussed about Bitcoin and Tesla. So wealth can also be generated. It is about doing business in a recession-free market. Recession-free means currency, Forex, and commodities. Stocks are not recession-free market. So recession-free market is currency and commodities because you can trade on either direction, either on the rising market or declining market, you can profit equally. A perfect part-time business, because the market is open 24 hours, so you can easily enter into this market after your job hours. And as I've already spoken, one of the best work from home opportunities means if you have the skills, you do not need anything else. You do not need any infrastructure. The best thing about it, you only need a device. A PC, computer, or laptop is more than sufficient. The least, a mobile device, any device on which you can see the charts, and a good internet connection. There's no third requirement. That's all. So you can do work from the comfort of your home, and this is something that I would like to say that many of us within our community might be struggling, because we all know that such a prolonged economic crisis because of this COVID-19 pandemic. Now, when I speak here in Pakistan, the third wave is on high, and we are again very near to lockdown. This is something we have to learn to live with. Perhaps there is no choice, and so it's a very good work from home opportunity. And because it's an entrepreneurship business opportunity, so this opportunity not only offers you active income possibilities, but also passive income possibilities. Now, active income means you are working and you are earning. That is active income. Like you are doing the job. The more you work, the hours you spend on work, you get the salaries. But the passive income is something which is associated with the business and self-employment venture. That is, there are some possibilities that you can even earn without working, but obviously that is not the first step. I'm talking about the later phases. So a very big market. Thank you very much for your very valuable time you have taken out to attend this, and I believe that we have given even sufficient effort in it to give you a real insight about these markets, obviously remaining within the limited short time span available to us. So thank you very much. From now, I will be taking a few important questions, and we will be completing today's session. So,
okay, thank you very much. Thank both of you. Excellent session. I had a few questions in my mind.
Yeah.
So when you're talking about macroeconomics or macro circumstances, there is one situation that has recently evolved: Suez Canal, the container blocking terminals, and there's a huge traffic jam, of oil containers and cargo containers. Does that mean oil is going to jump? I mean, the supply is going to be short again. The oil price is going to jump again. Is that a speculation? Or can one
actually, this is not exactly related to the price. The reason being that this is resulting in an extra cost. Yes, aspect, and the number is the time lag. Because of this hindrance, the time is delayed. So you can say that inconvenience of 1 week coupled with an extra cost. So
a shortage of demand.
Shortage of demand is a possibility. Yes, the shortage of demand.
Very short term.
Yes. So these do have an effect, but these won't have a very major long term effect. It's a short term.
Okay, Numan Liaquat has a question to ask. He said, what are the important macroeconomics and microeconomic indicators that influence our analytics?
There are so many in count that I have tried to write some of them, but they are still so much insufficient, because it's a very big industry. Literally, there are hundreds of indicators. But yes, it doesn't mean to be successful or professionally successful, you need to know all the hundreds. The key one are in count of near to 20. So to be easy, 20 indicators, technical indicators, and approximately the same 20 fundamental analytics should be sufficient to be successful in this market. Now, 20 plus 20 means 40, so please kindly don't expect that I will be naming 40 each individual. That is obviously few of them have been named, and this is something, the skills which need to be learned and which cannot be assumed to be happening in a very short time.
Okay. Abdul Wahab has asked a question, and very relevant to what we're already saying. Do technical and fundamental analysis, can they have opposite predictions? So technical saying one thing, fundamental saying another. And then he has another part of the question, says, can you please give us an example of a current position? Suppose today is 29th March, and we are buying cryptocurrencies. Which tool should we use? Both technical and fundamental?
Actually, perhaps Abdul Wahab is looking forward for a precise answer on it without realizing that it is not as simple, to be honest. For example, yes, at times there are conflicting information regarding fundamental analysis and technical analysis, and those are the times which warn that it is not the right time to enter the market. It's not the time to make a decision to buy or sell. Just wait for the correct moment. The moment when the fundamentals and technicals both suggest the same direction. Why not wait for that time and profit from a solid opportunity? Okay, someone named Warren Buffett over here. So I would like to name two important people in this world. One is Warren Buffett, and second is Jack Ma. Jack Ma, the Chinese guy, the millionaire, the most richest man of China in recent years, not now, the Alibaba guy. He also is very vocal and has given a lot of lectures. Both of those, Warren Buffett is in fact financial markets guy. Both of them are very vocal and clearly write in their books as well as give in their lectures that the key to success in this market is patience. It means you must have the patience to enter and take decision when there is the right time, not just trying to swim when you don't know the swimming. For example, the beautiful word, the beautiful term used for today's webinar is swimming in the financial markets. Now, just assume that you have watched, you know to swim in a swimming pool, or you have always swum, you're always swimming in a shallow water, or maybe you're learning to swim. Now, the question you're asking is about the deep sea or ocean. How can a novice swimmer be told that what is there in the deep sea or ocean? So with all due apologies, I being a very seasoned teacher and trainer assume that it is not possible to give the answer in a single word. It is a skill which needs to be learned, and the answer in the easiest word I can give is yes, fundamentals and analysis. Technical are two independent exclusive analysis. Both can give conflicting signals. Let's keep it simple. Conflicting signals. One suggests that sell is a better position, the other suggests that the buy suggestion. At this moment, why do you need to trade? What is there over there? Why don't you wait for the moment when technicals and fundamentals both suggest the same direction? And talking about now that is 29th March, what is there in the cryptos? Okay. Now you are again inclined towards predicting that you get a golden word. For example, I just want to say that I just speak out that this is the right time to do this particular thing. And I know many people would be so much untrained or foolish that without any other thing they will start jumping into the deep sea. I do not want that to happen. So simple words is kindly avoid taking advice unless you are professional. I do give advices, but that is on the professional manner. So predicting, इसको उर्दू में कहते हैं नजूमियत. Please नजूमी वाले बातें नहीं होंगी. Skills is not about predicting. Like analyzing means extrapolation, yes, but analysis means that you can take a position with adequate risk management. So next question was.
Okay. Next question is by
Anything
second Fasi Kareem Raja is saying how much index technical analysis can affect stock technical analysis.
It has a very good relationship, yes. Basically, this is based on the sentiments of the market. Like, for example, in Pakistan, those who relate to Pakistan, for the previous good approximately 5 months, the stock market indexes showed high, kept on going high, means almost all the stocks in Pakistan Stock Exchange witnessed a bullish trend with very few exceptions. So these are very much correlated. There is a correlation, strong correlation. So when the indices are rising, most of the stocks will rise. So these are correlated.
Khalid Jumra is saying, how can one deal in Forex market in Pakistan? Do we need to open an account with a brokerage firm?
Yes, whether you are in the financial markets, whether you are trading the stocks, that is Pakistan Stock Exchange, you have to have an account with the broker itself. Same with the currencies, you must have an account with a broker, and same for commodities, there is no exception. In for financial markets, you can only trade when there is a broker. Without a broker, that's not a possibility for either of the markets.
I think that's more or less it. Final comment by Abdul Wahab was that he was asking about the tool required. He was saying cryptocurrencies, he was saying which tool do we use for analysis?
Well, the tools at this very particular moment when I am speaking over here, you must consider the Fibonacci retracement because the cryptos is on a downside, with caution, obviously, with skills, and the trend lines. So one is the Fibonacci retracement, number two is the trend line, number three is the Fibonacci expansion because the trend can continue, and the number fourth is the moving averages, the combination, a good combination of two moving averages, whichever you use. And these are okay, you must have at least these, but for supplementing it, another indicator, adding another indicator is good. That depends with which you are comfortable, like RSI or awesome oscillator or similar sort of IMACD. Any one of these, not all the three, any one of these could be very useful to if you are skilled enough to use them. Like for example, a tool, hammer is a tool, and you can nail with a hammer. Now that depends how well hammer you are able to use. So tools are something which are available. The skills is something that how well you can use them. So if you are skillful, I have just spoken about the few, consider them. And if not, you must consider always to have appropriate knowledge and skills before entering these markets. Otherwise, there could be some mishap. Remain cautious.
Great. Okay. I think final comment, and Faizan Iqbal has asked a good question. The question is about young investors and with limited capital stock market. I
Yes.
think right, you said very well that it depends on your risk appetite. It also depends on, I don't know if coming in straight away with a huge amount of capital straight into the market is necessary.
No, absolutely not. That is unwise.
In fact, when you were saying that, in your extra time after your day job, I mean, if the market is over 24 hours, this is something that you can start doing as a part-time
Yes,
activity. So if that is the attitude,
Yes.
right, and you have for some risk, that can define your course of action,
Yes.
isn't it?
Yes.
So that more or less defines what Faizan should be looking for. I know
Yes.
quite a few individuals who
Yes.
do, off-site trading. And,
Yes.
The lunch breaks, I see their terminals open.
Doing it after all.
Yes.
This is not a lunch
Yeah. But I would like to say that yes, actually, when you have the skills, capital is not the main limiting factor. For example, let's say it this way. Fazan, let's assume that you are skillful and you are able to make good decisions. And if that is the case, if you can prove this with evidence, capital is never a constraint. Actually, capital will follow you if you are skillful. And if you have the capital but you lack skills, trust me, the capital you already have, irrespective how big or small it is, it will always remain insufficient. So it is about skills, not about. It is this way. It is this way. You must think. If you are a young investor, that is, you are a young actor.
Fantastic. I think the people asking for your LinkedIn profile, they'll continue to ask you for advice, for technical suggestions.
Definitely,
So
we have initiated this. Yeah, this is an initiative from our side because if I talk about myself, 21 years in this financial markets and approximately 14 years of struggle before finally finding myself with a career, with a profession on which I can bank upon and leave my full day career, which I have pursued for a long number of years. These are skills which I felt, especially in this COVID-19 pandemic, I should be giving something back at least to this community. So this is something like, for example, these 2 hours. I'm very much thankful that you have spent these 2 precious hours of yours, and you are very much excited, and so am I. I feel very lively when I speak to my own ACC community, because I have spent whole my life, means good 20 years, 22 decades with all of you. So you are all very much welcome, and the LinkedIn profiles and if any one of your Facebook profiles, that will be inshallah made available to you. It is not written at the moment, but it will be made available to you. But please remember that this should be not assumed that your questions can be answered at the first priority. It can never be a first priority. This is something we are giving back to the community. It's a good gesture. So it's not an obligation. I'm saying this because I am your teacher, I am your senior. I want you to be rational and professional and think in a professional.
Great, thank you very much. And I think with this, we come to the conclusion of this session. Just a few housekeeping questions to be answered in the end. A lot of people were asking about the recording. So just as the session ends in about an hour's time, automatically a recording link is going to be sent to all of you. So with this recording link, you can watch the recording of this session as many times as you want. Number 2, people were asking about CPD certificates. So yes, within this week, you will receive CPD certificates. All of those who have attended the session for more than half an hour will receive the certificates of participation through email. Okay, so that are coming. There were people who were asking about the slides, and unfortunately we will not be able to share slides. However, the recording of the session is available with you, and essentially the information shared with you through this session, that is what will be available. So make use of that. If you have any further questions or any comments, please do write to us through email, and we will be able to help you with your answers to the questions. Thank you all very much. Thank you for staying back for another half an hour. This topic was so engrossing and interesting that we thought we'll continue the discussion. Thank you for staying back, and have a nice evening. Thank you, and Allah Hafiz.
Thank you.
Thank you very much.